Welcome to a deep dive that's all about making sense of the dynamic world of crypto.
It certainly is dynamic.
Today, we're not just dipping our toes in. We're cracking open a truly fascinating document, fresh off the digital presses, the Binance mid-2025 report. And we're going to blend that with some critical real-time market observations, to give you the clearest picture possible of what's happening right now and what might be on the horizon.
Yeah, and what's really compelling about this report, I think, is that it's far more than just a dry financial document, numbers and charts. Binance offers a unique kind of forward-looking perspective on where the market stands, where it seems to be heading, and maybe most importantly, what thoughtful investors like you need to know to stay ahead. So we'll be synthesizing Binance's analytical insights with the latest market movements, hopefully providing you with a comprehensive and, actionable view.
That's exactly our mission today. This deep dive is designed to be your shortcut to being genuinely well-informed. We really aim to cut through all the noise.
There's a lot of noise.
Oh, there is. We want to extract the most crucial nuggets of knowledge about the crypto market's current state and future trends. Our goal is basically to help you understand what this all means for you, the thoughtful investor, without overwhelming you with jargon or, information overload.
Right.
Think of it as your personal guide to understanding the big picture in crypto right now.
Precisely. And just to give you a roadmap for today's discussion, we'll begin with a quick pulse check on Bitcoin and Ethereum, examining their current positions and the sentiment around them. Then we'll dive headfirst into Binance's overarching macroeconomic outlook, which provides a really critical lens for understanding the entire market.
Okay.
Following that, we'll explore I found it quite surprising take on Bitcoin's role. Is it truly a fortress, or could it, become a trap?
Interesting.
And we'll unveil a very interesting perspective on altcoins, too, challenging some common assumptions about the famed altcoin season. Finally, we'll reveal the 9 major themes that Binance believes will shape the market's future for the remainder of 2025.
Okay, fantastic. Let's start then by taking the market's temperature. There's I'd say a palpable sense of renewed excitement in the crypto space right now. Wouldn't you agree?
Definitely. You feel it.
If you've been watching the sentiment or even just talking to people, you'll notice many longtime observers are noting a distinct shift, a real re-engagement from people who might have been, sitting on the sidelines for a while. There's a feeling that a significant upward trend might just be on the horizon. It's almost like the market is collectively taking a deep breath and sort of preparing for something big. And
if we connect this to the current data, Bitcoin is, it's kind of stalling right at its peak, isn't it? Hovering around the $122,000 mark.
Which is an all-time high.
Exactly, an all-time high.
Yeah.
Territory we haven't seen before. And what's particularly challenging, I think, is that predicting the exact peak when Bitcoin is in new, uncharted territory is incredibly difficult. Yeah. We've seen this historically. Like, for instance, back in 2020, when Bitcoin first broke through $60,000, its final peak of $69,000 was almost impossible to foresee. It's just hard to call a top when you're making new history.
Yeah, absolutely.
The fact that Bitcoin is consolidating at this peak, sort of moving sideways, rather than experiencing a sharp correction, that's generally seen as a good signal.
Yeah.
It suggests underlying strength. However, it's also a signal that really demands our attention because these consolidation phases at new highs, they can precede significant moves, either, further up or potentially down.
So what does this all mean for those of you currently holding Bitcoin, especially if you've been in it for a while now? We're certainly seeing advice circulating to, have a plan, maybe start gradually taking profits.
Having a plan is key.
This seems especially relevant for those who bought early, say at maybe $20,000. For them, reaching $100,000 is a 5-fold gain. I mean, that's a truly significant return. But then, for those who bought later, perhaps at $70,000 or even $80,000. Well, a 5-fold return from there would mean prices soaring into the $400,000 range, which is let's face it, a completely different scenario.
A very different story, yeah.
So the key takeaway here, it seems, is that your entry position, your vita, as they say, profoundly affects your psychology and naturally your strategy. What looks like a massive gain for one investor might barely be breaking even for another. It just highlights why understanding your personal risk tolerance and financial goals is so crucial, rather than just, chasing numbers.
Exactly right. And while the general expectation, perhaps based on market sentiment and some historical patterns, is for Bitcoin to potentially reach, say, $130,000 to maybe $140,000, there's still a significant degree of uncertainty once we're in this sort of unprecedented price discovery phase.
Right. Uncharted waters.
For those looking to re-enter the market or maybe buy the dip, it's often suggested, and probably wisely, to wait for a substantial correction. Perhaps 30%, maybe even over 30% from the highest point, a potential 30–40% pullback.
Okay, that's quite a drop.
It is, but such a significant correction would likely signal a healthier re-entry opportunity. It tends to shake out the weaker hands, and create a more solid foundation for the next leg up, rather than simply chasing the current all-time highs.
So patience is key there.
This kind of patience can be incredibly rewarding in the long run.
Now let's talk about Bitcoin dominance, or BTCD as it's often called, because this metric, it gives us a vital signal about altcoins, doesn't it?
It really does. It's a key indicator.
And what's particularly insightful here, from the report and the market, is how Bitcoin dominance has dropped quite strongly from, 65.8% down to 61%.
Yeah, that's a notable shift. It isn't just a small fluctuation. And this drop in Bitcoin dominance, it actually mirrors a historical parallel we saw towards the end of 2024.
Oh, interesting. What happened then?
Well, back then, BTCD fell from about 61.43% down to 54%, and that sparked what we called a mini altcoin rally at the time.
Right, I remember that.
So when Bitcoin consolidates at the top, like it's doing now, and Bitcoin dominance falls concurrently, it generally means that capital is actively rotating. Specifically, it's moving into altcoins.
Okay.
The hope, naturally, for many altcoin enthusiasts is for BTCD to drop even further, maybe ideally into the 50s range.
And if it does?
If it does, well, that could potentially ignite an even stronger altcoin surge, maybe lasting 1 to 2 months, giving altcoins their significant moment in the spotlight. This capital rotation is just a crucial indicator of shifting market sentiment and opportunity.
Okay, so if we pivot then to Ethereum, there's this common, almost palpable question circulating right now. Should I sell my Ethereum?
Yeah, you hear that a lot.
Many people, it seems, bought ETH somewhere between $2,000 and $3,000, and now it's hovering around, $3,900?
That's right. And it's true that unlike some other cryptocurrencies, ETH hasn't really seen those dramatic multi-fold increases, those huge explosive surges that some other coins have experienced this cycle. For many who bought at, say, $2,000, it's now almost doubled, which is good, but it's not that huge leap compared to the parabolic runs some other altcoins have had.
Right. Not life-changing gains for everyone.
Exactly. And this can create a real psychological dilemma, kind of tra can kam li, as the Vietnamese might say. Investors find themselves caught in the middle, sort of lone quan lun quen, unsure whether to hold for more or take what seems like a relatively small profit compared to others.
Yeah, I can see that.
So while ETH has seen a pretty strong push from that $2,000, 2003 range up to $3,900, it just hasn't matched the really clear uptrends of coins like BNB or XRP or Solana.
Which have broken highs or are close.
Exactly. They've either fa done, broken their peak, or are gun chum, nearly touching their peak. This sort of indicates that for many ETH holders, their entry point wasn't excessively low, but ETH's current peak isn't significantly higher than its previous ones. It leads to this dilemma. Hold or take a modest gain.
Personally speaking, I've actually started selling some ETH gradually. Not all at once, but I'm planning to sort of outdone over Q3 this year.
A phased approach.
Yeah, exactly. I'm prepared to accept if the profit isn't huge. Moingwe sakasoka, everyone has different expectations.
That's true.
And it highlights a key distinction in this market, I think. This season, perhaps, no sap voyam naudan song nan hun la dan song dai. It seems better suited for those who play the short-term waves rather than trying to ride a long, drawn-out surge.
Quick hints.
Yeah. Short-term 2x profits can be really good. You take your profits, maybe you move on. This cyclical nature of crypto means adapting your strategy is just paramount. It's about recognizing the market's current rhythm, not trying to force a previous one onto it.
Which brings us to a really crucial point about general trading advice, especially for, newcomers to the market, the new traders.
Right, the thuter me.
For new traders, it's absolutely critical to use low leverage. I mean, we're talking maybe by 5 maximum, perhaps by 10 at the very most.
Okay, why so cautious?
This is key to simply tone tai dip low surviving in the long run. High leverage, it's satnot and lum. It will burn your capital incredibly fast. It's just a quick way to lose everything, especially in a volatile market like crypto.
Yeah.
Remember, the goal is to stay in the game long enough to learn and eventually capitalize on opportunities, not to make a quick fortune and then get liquidated immediately.
Makes sense. And what about entry points? You mentioned projects like Athena, ENA.
Right. Athena ENA generally considered a MUN project, a strong one with an untung tut, good foundation, Senfeng, okay, a very okay product. But the key, as with any investment, is where you enter the market.
When you buy in.
Exactly. Entering Lukmatish Lu during the accumulation phase, that's ideal. That's where you can realistically aim for those, say, 2x gains. But if you're buying IGIA in the middle of the chart after it's already started moving significantly, well, you really need to adjust your expectations.
Lower targets.
Yeah. In that scenario, you might only aim for maybe 50% to 70% profit before taking those profits. Don't expect a moonshot if you're not getting in near the beginning of a project's run. Understanding different entry points and adjusting your profit targets accordingly is just a hallmark of a disciplined trader.
And we should probably acknowledge the influx of new investors, right? The so-called F0 phenomenon.
Absolutely, it's important. For these newcomers, managing expectations is just paramount. Firstly, don't play with too much money. Only invest what you can truly afford to lose.
The golden rule.
It really is. And secondly, accept that but initially you will likely lose some money at the start. It's almost a rite of passage in crypto as you learn the ropes.
So focus on learning.
Exactly. The focus at this stage should be on learning the basics. Understanding swing trends, Kuntho Jain timeframes, Nin candlesticks, and basic Mohin Koban, basic patterns, before diving into advanced indicators or complex strategies. Building that foundational knowledge first is far more valuable than chasing quick profits, because without it, even your wins can be fleeting, maybe just luck.
All right, let's zoom out then and look at the bigger picture, straight from the Binance mid-2025 report. This section delves into the macroeconomic lens. So where are we now, according to Binance's Red Divisions report? What's the big question it's tackling?
Yeah, the report really addresses that critical question. Where exactly are we in this current market cycle? And the perhaps unfortunate reality, according to Binance, is that the crypto market this year is just Quachuhan. So Voitrik Daisedlan much harder to navigate compared to previous cycles.
Why is that?
Well, large capital, the Dong Tian Lun, it remains primarily Trong Tang Taifeng Tu La Qing in a defensive stance. There just aren't enough converging factors right now.
Like what?
Whether it's Yutu, Lin, Quandin, Vimo, macroeconomic factors, the broad Dong Tu flow of capital, or significant participation from Kakna Do Tu wealthy retail investors. There isn't enough alignment to trigger a massive boom. This caution from the large players really sets a distinct tone for the market's current trajectory.
And Binance uses a very specific term for this period, don't they? They call it red divisions. What exactly does that mean?
Right, red divisions. It signifies that Tangtung Kingtu Tuan Kongkondu global economic growth is no longer uniform or synchronized.
How so?
Well, if we look at the global GDP snapshot they provide, the U.S. maintains a Dantung Kong Lo Ganyat, a very slight growth momentum, although it is slower than before. In contrast, China, Europe, and Japan show Tangchung Vat La Tup Vading Yang, very low sideways growth.
Okay, so divergent.
Exactly. This economic divergence is a significant disadvantage for global money flow, because when major economies aren't in sync, large investors become dull to McKinsert. La Tun Truck. Very cautious with their investments, and this caution hinders the broad flow of capital across asset classes, including crypto.
Makes sense. And drilling down into the U.S.
Yeah, diving deeper into the U.S. context, the labor market is caught healthy, but caught to huge, showing signs of cooling down. Fewer new jobs are being created, although unemployment remains stable for now.
And inflation, still sticky.
Inflation, unfortunately, is chiahamokichinan. It hasn't come down fast enough. It remains stubbornly above the Fed's targets.
Which means the Fed stays cautious.
Precisely. This situation forces the Fed to be extremely cautious with its monetary policies. They haven't yet signaled any significant new long hey la Utah now dato days om 10 for yung loi tai sun ro easing or stimulus to push money into riskier assets. Furthermore, the Quankach lei suit tri feel mugang of Vujat Lacao, the spread on U.S. bond yield is very wide, which signals Kangtang Trong Ti Trung no Kung tension in the public debt market and concerns about fiscal sustainability. And while large U.S. fiscal stimulus packages are supporting consumers in the short term, they are chua des tauza muka aplaktangte, not enough to create long-term growth pressure for the overall economy.
So a mixed bag, leaning cautious.
Yeah. All these factors combined mean that the broader economic environment isn't yet signaling a clear green light for aggressive risk-taking.
This brings us to what you flagged earlier, perhaps one of the most important takeaways from this entire report. Binance includes something they call the Figure K chart. Tell us about that.
Oh, yes, Figure K. It's fascinating.
What does it show?
This chart basically links the Chuko Sansud Tuanko global production cycles, which is essentially the health of the real economy, with the Bin Dungja, Bitcoin Trong Tuol Fang Vokwa, Bitcoin's price movements over the last 12 months.
Okay, linking Bitcoin to the real economy.
But here's the deal back bit. The special thing about this relationship, according to their analysis, Bitcoin doesn't just reflect economic cycles. It Vunkon Dung Dun Dun Da Choko Nei Trong Kong Tu 8 Dun 12 Fang. It is still leading this cycle by about 8 to 12 months.
Wow, so Bitcoin moves before the economy.
Often, yes. Its price movements often precede real economic shifts. And currently, according to the report's model, Bitcoin is in a mismatched phase.
Mismatched phase, what does that mean?
What this means is that Bitcoin is recovering, showing strength, but the economic indicators are still trongang kaibong tup by no chua ron in low areas and haven't shown clear signs of recovery yet. This situation signals that the market is searching for a dim kan bung mo, a new equilibrium point. It suggests that investors need be psychologically prepared for potential fluctuations as the real economy hasn't quite caught up to Bitcoin's rally.
So you can't just look at GDP numbers to guess Bitcoin's next move.
Exactly. It's a critical insight because it means you can't rely solely on traditional economic indicators to predict Bitcoin's immediate future. Bitcoin itself is acting as a leading indicator in this model.
So to sort of summarize this macroeconomic view and what it means for investors, what's the core message here?
Well, the report concludes that 2025 will likely see Funhoi King Daikaha, La Rong clear economic divergence, Lam Fati Dan persistent inflation, Vayunke Chin Sak Tan atrocious policies, Vaki Funda La Pantan Kolno, Dang Tup Di, and declining global liquidity.
A challenging environment.
Yeah, this confluence of factors creates a significant tuk challenge for the crypto market. Dong Tien Lunti no Vandung Wangwei Kansatoi. Large institutional capital is largely on the sidelines, observing no churdo valmot kachkwa la o ekdo not pouring in massively just yet.
So caution is advised.
Definitely. The report strongly advises investors to Theosatin Kezaflio Ve Mo closely follow macroeconomic data to avoid being Quantio Yankaitom Gun by Yankan Songung swept away by short-term news and fleeting ways. Many investors, Vatlas Lunju Sung Hoiva Chunsong uptrend can easily mistake a short-term bounce, a relief rally for the start of a true uptrend. That can lead to costly mistakes.
The dreaded bull trap.
Precisely. The market now demands sukin and patience, a situation where FOMO, no Hongtek Gukno, simply giving in to the fear of missing out, can no longer guarantee a win. Aggressive moves should probably only happen when Tengkwan Quotik Chernpuk Sum Mank Lane va Makuvuk Pinto Ko Bauhio, but Din Sank market liquidity genuinely strengthens and all economic regions signal a green light for broader growth.
So it's a market for the discerning and patient investor now, not necessarily the impulsive one.
That seems to be the core message, yes.
Okay, let's unpack this next big question from the report then. It's a really fundamental one for any crypto investor right now. Is Bitcoin truly the buttress, the stable foundation for the entire market? Or is it actually a trap, a major pitfall waiting at the cycle's end?
That's the $1 million, or rather trillion-dollar question, isn't it?
Huh?
Well, according to the report, and it's hard to argue, Bitcoin is unequivocally the Trung Tem, the center of all major games in crypto from mid-2025, perhaps alongside the burgeoning field of AI. Its current market capitalization is already Hun 2000T over $2 trillion.
Which is staggering.
It really is. And this isn't just a number. It positions Bitcoin as the Tai Sen Lun Tu Sao Atrentuan Co., the sixth largest asset globally. It surpassed giants like Meta, Google, and even physical gold in some comparisons.
Wow.
This $2 trillion figure is truly biskung symbolic and serves as a but not Lun, a very substantial buttress for the entire crypto market.
And the ETFs played a huge role there.
Absolutely. The arrival of ETF spot Dahoko spot Bitcoin ETFs in the United States has truly Chupcho Bitcoin Lutzak helped Bitcoin transform. It's attracted Thumbdin Lun, the largest institutional capital flows we've seen, and really elevated Bitcoin to the case a global asset class.
Has that affected volatility?
Significantly. This institutional inflow has Yamdang Koisu Bindang considerably reduced its volatility compared to previous cycles. We no longer see Bitcoin experience those wild swings of 20–30% in a short period as often. Now it's more like adjustments to a 10%, under 10%. And the steady growth in Bitcoin holdings by these institutional groups has really confirmed its status as a Daisan Vimo Dungaha, a true macroeconomic asset. It's a testament to its growing legitimacy and stability in the broader financial world.
Okay, so that's the strong buttresses argument, but the report also hints at the other side, the potential trap. How does that work?
Right. While Bitcoin is undeniably a strong anchor, the report subtly reminds us, Konkoji lo maimai la chakyan, nothing is forever, nothing is guaranteed.
So where's the risk?
It leads to the trap angle. The larger the institutional money flowing in, the mukt dapang van horkankao, the higher the concentration of capitalization becomes.
Sure.
And if these ETFs, these large holders, were to suddenly have a change in strategy, maybe due to regulatory shifts or just a change in institutional sentiment,
the market reacts strongly.
the market Sapin Zutlaman would experience very strong volatility. Historically, these sudden shifts in large money flows have often caught low retail investors off guard, frequently leaving them holding the bag.
Yeah, we've seen that happen before.
So the crucial lesson here is that you need to kwansat dung tai, observe the actions of large institutions, and not place all your trust in this temporary stability. The very strength Bitcoin derives from institutional adoption could potentially become a point of vulnerability if that institutional conviction wavers.
It's a double-edged sword, then.
It's certainly a nuanced picture. Look at the performance. Over the past year, Bitcoin has risen approximately 13%. Now, that's impressive performance. It's Chidung Sao Vang Toi, only behind gold, which rose 24% in the same period.
Still strong relative performance.
Very strong. It sa S&P 500, Apple Do, ETH, Hey Solana. It outperformed the S&P 500, Apple, Oil, Ethereum, and Solana over that time frame. This performance, as the report confirms, really solidifies Bitcoin's beat date there, its very new position, as not just a speculative asset, but increasingly as a Nuichuan-duk, Kak-Zongtian, Loyachan, Kima-Diao-Tin, a safe haven chosen by capital when the market experiences strong volatility.
So it's evolving into a foundational asset.
It seems to be, yes, in diversified portfolios. However, this safe haven status comes with a twist. The Kangyo Tien, the Loit Dai Sankeku, Shuan Kang Len, Ti Hi Ti Chung Dao Chiel, Ti Mukdo Hon Lots, Nokung Se Kang Zuzui. The more money poured into an asset with a safe haven expectation, the more intense the panic will likely be when the market eventually reverses.
Right, the crowded trade effect.
It's a classic characteristic of assets deemed safe that become crowded trades when sentiment shifts. The rush for the exits can be quite dramatic.
So, putting it all together,
Yeah.
what does this mean for you, the investor, trying to understand Bitcoin's role right now?
Well, the report clearly positions Bitcoin as the Trung Tum Fung Tu, the central defense of the market. It emphasizes that Ju Vaitral La Bitfeng serves as the launch pad for the entire market, largely thanks to its massive capitalization and that influx of institutional money.
But be careful.
But despite all the positive news about institutional buying, despite the general FOMO you might feel, Binance strongly urges that you should not let your guard down. Vigilance remains absolutely key.
So stability doesn't mean immunity.
Exactly. Bitcoin's newfound stability doesn't equate to immunity from market forces. Rather, it probably implies that its movements will have even greater ramifications for the rest of the crypto ecosystem.
Okay, that makes sense. Let's unpack this next critical part of the Binance report then, because this is something I know everyone is asking about. Altcoins.
Ah, yes, the altcoins.
Specifically, the elephant in the room, where exactly is the much anticipated, much hoped for altcoin season?
Right. And this is truly one of Binance's most, I'd say, surprising revelations in the report.
How so?
They state quite plainly that the Hongtai Mokai Solhe Lamokai Bel Da Chongmin found no data or charts to prove a Sitang Trung Dong Lo Cool altcoin, a broad synchronized growth of altcoins.
Really? No evidence at all.
Not in the way people usually talk about alt season. The report doesn't show evidence of Dongtian 2 Bitcoin Lantaw saying altcoin Tio Kai Numgan, money flowing broadly from Bitcoin to altcoins across specific sectors, or any Songtrang Nanglunula Mimcoin AI. Define Bungnom Menchuk Day large industry waves like the strong explosions of meme coins, AI, or DeFi we've seen in previous cycles.
That's a direct challenge to the narrative.
It absolutely is. Instead, Binance's analysis focuses quite specifically on detailed analysis of individual large ecosystems. They're looking at real development, fundamental activity, not just, price charts going up.
Can you give some examples?
Sure. For Ethereum, the report emphasizes upgrades like Fusaka, the Soling the hot dunk number of active wallets, some Jiaozich total transactions, fee levels, and the Suchon Bichon Nukupu Kaktochek preparation for institutional demand. What's notably absent are those overall price charts or broad altcoin market cap figures suggesting a general surge.
Okay, focused on fundamentals.
Exactly. Similarly with Solana, the report highlights its Sufu Kwesao Mokai Ko recovery after an incident. Its Solgaozich, number of transactions, its Chifi Tup, low costs, and prominent Ungdong Defined Kong Vico consumer, DeFi and consumer applications. Again, no grand pronouncements about an altcoin season or guarantees of safety.
And BNB Chain.
Same approach. For BNB Chain, they analyze its DeFi meme coin and real-world asset RWA sectors, the Lung Jiaodik Trin Shui on-chain transaction volume, and Sofa Trin Dong application development. No market cap comparisons, no wave charts indicating a general altcoin boom is happening now. This deep dive into the fundamentals of specific ecosystems, rather than just looking at overall market cap, is a really key shift in their assessment this time around.
So what's particularly insightful here is the report's, let's say, nuanced conclusion that altcoins this year are not experiencing that broad, explosive surge many had hoped for. Is that fair?
That's a very fair summary, yes.
Instead, the market seems to be focusing on the real, sustainable development of individual ecosystems.
It sounds like a far more selective environment, demanding a different approach from investors. Precisely. The days of simply throwing darts at a list of altcoins and expecting every single one to perform well are likely over, at least for this phase.
So what about things like AI, DeFi, meme coins? Does the report ignore them?
No, not at all. Binance does mention Ningling Vuk Vido, new AI and a fat trend to find a meme coin, but Kakogin Lun me fields like AI, DeFi development, meme coins, and new major technologies.
Okay.
But, and this is crucial, these are presented as Ohun Quan Chong Dang Tio Doin Trong Nu quite important trends to watch in the latter half of 2025. They are highlighted as potential future waves, but explicitly not as Ban Chungva Mokgedat Sung Hin Ho Va Mont Mi Zinrage Toi Diem Hit proof of a current strong wave happening right now.
Future potential, not present reality.
Exactly. That distinction is vital for managing your expectations and avoiding, premature investment in trends that haven't fully materialized yet. It's basically an explicit warning against chasing immediate hype without seeing underlying substance.
Okay, this really signals a new playbook for altcoins, doesn't it? So what does this all mean for you, the listener, the altcoin investor, if you're looking at this market?
Well, counterintuitively, perhaps, the report actually shows that altcoin top trong muenemak du von hov lun yimma dang ki tangai no lai la ning altcoin mafa don't top altcoins this season, despite their very large market caps, are actually the first ones to break new all-time highs when they do surge.
Like which ones?
Examples like BNB, XRP, and Solana are cited. This demonstrates that Dumthino Kosachant Lug Vokun La Kumkit capital flow is incredibly selective. It's really not a rising tide lifting all boats this time around.
So Binance is basically issuing a warning.
I think so. Binance's report, in essence, is a loi maming chozang la Binance hot dangyak nyakaknya du tho fei tho va chant lak go kang, a message that I believe Binance is using to remind investors to be vigilant, to select carefully, and chun bi tum li chu kong fai la du vol yim kan song nua to prepare their mindset rather than chasing illusory waves.
The two-day Nodakwaroi, that era of easy, broad altcoin pumps seems to have passed, at least for now. The money is flowing into established, fundamentally strong projects, not just anything with a catchy name or a promise of quick gains.
Right, making due diligence more critical than ever.
Absolutely.
So let's make this actionable. What does this mean for you if you're looking to invest in altcoins? First, maybe forget the idea of an easy money altcoin wave.
Yeah, don't expect Mutkansang altcoin bankyoan haila dongfine yo moy bull run an altcoin wave based on easy money or synchronized moves like in previous bull runs. That's simply not what the data suggests right now.
Okay, so what should you do instead?
Instead, the advice is to Luya Chant Kukeng Hyungke protocol. Carefully select protocols. Look for those that are I Kung Beat Ning, Ma Hum Fei I Kung Do, too widely known, but perhaps not where everyone is piling in just yet.
Look for platforms with what kind of characteristics?
Look for platforms with a Lungui Dungfo work a broad user base, a Lotrin Kongurung, a clear technological roadmap, and critically, Sukum J Tik Gukka Kakdon team, Koatuk active participation from institutional money. These are often Yunko Lunlendo team, the platforms that are likely to surge first, as they represent fundamental value and established adoption.
Substance over hype.
Exactly. It's about identifying substance over fleeting hype.
And how do you identify that substance?
You need to satnangizut on-chain thikte, closely track real on-chain data. This means looking at metrics like wallet activity, user numbers, transaction fees, and Cup major upgrade events. These help you truly understand the long-term viability and growth potential of a project.
Digging into the data.
You have to. And critically, trend theo kill, hype coins, coin, nakake trend meme, but AI, himushunta zut leet. Avoid chasing small hype coins, meme coins, or AI trends when you lack concrete real-world data to support them. The report really reinforces that money remains concentrated in Bitcoin and in large ecosystems with Kongen Fat Trend, Hadong on-chain Ben, developed technology and sustainable on-chain activity. This is where the smart money seems to be focused and where you should probably apply your strategic attention.
Okay, so look for things like developer activity, real partnerships, actual problem solving.
Yes. Consistent developer activity on GitHub, significant partnerships, genuine problem-solving applications.
Yeah.
Rather than just social media buzz or, meme potential.
Got it. Okay, let's shift gears now and look at the long-term view. Beyond the current market state, Binance's report highlights 9 major themes for the rest of 2025.
The forward look.
Exactly. While we've delved deep into the macro landscape, Bitcoin's pivotal role, and the nuanced reality of altcoins, it's vital for you, the listener, to know the broader picture they've painted. This is where you can potentially spot opportunities to get ahead of the trend and position yourself for future growth.
Absolutely. Binance Research believes these 9 key themes are sort of the major pieces around which the crypto market will likely revolve in the coming 6 months or so. And while capital may not be flowing intensely into all these areas right now, understanding them early can give you a significant strategic edge.
Okay, let's hear them. What are the 9 key trends?
All right, here are the 9 key trends from Binance for the second half of 2025. First, Fed policy and fiscal stimulus. As we discussed, the Fed remains extremely cautious. Inflation isn't falling fast enough, the labor market isn't overheating. This environment actually suggests a low likelihood of aggressive monetary tightening.
Which could be good for risk assets.
Potentially, yes. It creates conditions for the Fed to eventually kanjam lay sutak, la nu long tin tend, consider reducing interest rates or easing monetary policy. Such actions would make traditional safe assets less appealing, naturally pushing capital towards riskier assets like crypto. And you couple that with the Goikichdikdai Kualut very large fiscal stimulus packages already in play, which provide a general uplift. These factors together form the tin de titrumbu kwamotkechuko risk on the premise for the market to potentially enter a risk-on cycle where money actively flows into riskier assets seeking higher returns.
Okay, trend number 1, macro tailwinds, potentially. Number 2.
Second, crypto regulation shifts in the U.S. We're seeing a gradual, but I think significant move away from the bienfap sufat, vadio trikumdran harsh penalties and investigations towards mutkun fap lidok, lamin bak varong, a very transparent and clear legal framework for crypto.
Which bills are key here?
Key bills like the Genius Act, the Clarity Act, and the Bitcoin Strategic Reserve Act are being pushed. These legislative efforts aim to provide that much-needed legal certainty, which is absolutely crucial for institutional adoption and broader market stability. The goal is a thị trường tốt hơn, a more stable and better-growing market, as clear rules encourage more mainstream participation.
Right, clarity helps everyone. Trend 3.
Third, traditional finance and crypto integration. This is about an increasingly deep hanap-kang-gaig-sao integration between these two worlds. Just think about the impact of giants like BlackRock and Fidelity launching Bitcoin and Ethereum ETFs.
Which brought in billions.
Exactly. They've already attracted hangchaktidola tens of billions of dollars. This fuels a suketopment midjohai kejune, a strong combination between traditional finance and crypto, leading to significant growth in new products.
Like what kind of products?
We're talking about Semfum, Bidu, Lian, Quanden, Token Hoa products related to tokenization of traditional assets, or innovative Komku Taichin's on-chain financial instruments that bridge the gap. This integration will just make crypto more accessible and legitimate for a broader base of investors.
Okay, number 4.
Fourth, stablecoins' evolving role. Stablecoins remain rut quan tronc, very important, serving as that essential bridge between fiat and crypto. Their circulating supply is growing, with Kakums, Viduzion, La PayPal, Visa, Morong Tikkup, major players like PayPal and Visa expanding their integration, and even e-commerce platforms like Shopify testing USDC payments.
So they're becoming more mainstream.
Exactly. With greater regulatory clarity, stablecoins are set to become a Congo Chin Chin Look de Ket Noi Dai Chin Trien Tung Ka blockchain key strategic tool connecting traditional finance with blockchain, enabling faster, cheaper global transactions. They're moving beyond just being trading pairs.
Makes sense. Trend 5.
Fifth, real-world assets, RWA. The report projects this market will shift from Fat Hein to Dunk passive issuance, where assets are just tokenized, towards Jiao Zik Soy Dunk Drain to terms active, vibrant trading in the secondary market.
What are RWAs again?
They represent tangible assets like real estate, commodities, maybe even government bonds, tokenized on a blockchain. This active trading is a crucial step to Mulong then Quan expand liquidity for these traditionally illiquid assets, and also to Taidoi Kekotruk Vataisan Techup Va Tange Hilquachu define Kung Yula. Jonyung Kekong Quintong change the collateral structure in DeFi and increase efficiency for both DeFi and traditional finance. Imagine trading fractional ownership of real estate instantly.
That's a big potential shift. Okay, number 6.
Sixth, Bitcoin finance. This theme focuses on moving Bitcoin from just passive accumulation where it sits in wallets to being an asset that can be actively used as collateral within the broader financial ecosystem.
How would that work?
Solutions like Bitcoin L2 cross-chain Bitcoin Layer 2 networks like Stacks or Rootstock and cross-chain bridges will support this development. This is seen as a potential hidden gem because a vast amount of Bitcoin is currently locked up, not yet actively used as collateral within its native network or broader DeFi.
Unlocking dormant capital.
Precisely. Unlocking this immense value through secure methods could dramatically increase Bitcoin's utility and demand, letting holders use their assets without selling.
Interesting. Trend 7.
Seventh, Ethereum value accumulation. While challenges definitely remain for Ethereum regarding decentralization and reliability, the report suggests that the Thị L2 Secosio Lahubnet Layer 2 market will show signs of consolidation.
Fewer, bigger L2s.
Likely, yes. Instead of tons of smaller, maybe less efficient L2s, we'll see a few dominant, robust solutions emerge. Alongside this, Kamohin Sing Fee Bon Fonka and sustainable fee-generating models are likely to be prioritized, ensuring the long-term economic viability of the Ethereum ecosystem. Upgrades like Fusaka are key here for scalability.
Got it. Number 8, AI.
Eighth, AI integration in crypto. AI is undeniably a hot trend outside crypto, but its genuine integration into crypto is still evolving. While Ninkat non-chain Lian Quan done AI hit Dum Quan 131% on-chain activities related to AI have increased about 131% since the start of the year, and AI projects certainly attract investor interest.
But
the report notes that many current products lack deep native connections to blockchain. They often just Mintio Kai trend, ride the trend by superficially associating with AI. The real opportunity lies in deeper integrations, maybe AI-powered trading, decentralized AI networks, AI for smart contract auditing.
So look beyond the buzzwords.
See, exactly. Investors should discern between projects genuinely leveraging AI for crypto-native solutions and those merely tagging along for marketing buzz.
Okay, and the final trend, number 9.
And finally, ninth, prediction markets. Binance assesses this as potentially a Lopat Tung Tung Tin Tung Co., a global information infrastructure, with the potential to Voot San Yang KT Trung Kok Truong Tung surpass traditional betting markets.
How so?
Platforms like Polymarket are cited for providing Thung Tin Sak Sut Toing Tung 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 Tuk Sut Ken Trung Thung Lai Zat La Chin Saks real-time probabilistic information for future events with often high accuracy, especially as AI integration enhances their capabilities. These markets allow users to bet on outcomes, creating a collective intelligence that can be surprisingly accurate.
So beyond just gambling.
Far beyond. They represent a powerful tool for aggregating information and forecasting, with implications across many fields.
Wow, okay, so pulling all 9 trends together, what does this all mean? It sounds like the second half of 2025 is shaping up to be quite a turning point.
That seems to be the implication, yes. Driven by this mix of Chinsake Monai, Konget Vafapali, macroeconomic policy, technological advancements, and evolving legal frameworks.
These are the crucial threads to watch closely then, alongside, of course, your own vigilant capital management. These themes seem likely to dictate where the real innovation and significant capital flows might occur next.
That's the idea. They could create the next wave of opportunities for those who understand them early.
Okay. We've certainly unpacked a lot today. We've gone from the Binance mid-2025 report, mixed it with real-time market action. Our deep dive covered everything from those big macroeconomic forces at play to Bitcoin's really pivotal yet maybe double-edged role. We've explored the nuanced reality of altcoins, sort of challenging that notion of a broad, easy altcoin season.
Right, the selectivity there.
And finally, we've unveiled those 9 crucial trends that Binance predicts will shape the market for the rest of 2025. We really hope this has given you, our listeners, a clearer, more informed perspective.
Yeah, and if we try to connect all this to the bigger picture, it seems pretty clear the market is maturing, doesn't it?
It does feel that way.
It demands a different approach now, one that is informed, patient, and definitely strategic. The days of easy money and just blind FOMO seem to be giving way to a more discerning, maybe more complex environment. The report really highlights that the biggest gains going forward will likely come not from chasing every hot tip or every small unproven project, but from really understanding the underlying fundamentals and those broader economic shifts that drive capital flow.
Patience and data are key.
Patience and a data-driven approach are more critical than ever, I think. The market is becoming more professional, more institutionalized, and your strategy really needs to evolve with it.
Which leads us to a final thought, a provocative question perhaps, for you to consider as you navigate this evolving landscape. In a market that's becoming increasingly sophisticated and selective, where do you see your biggest edge? Is it maybe in understanding the intricate macro landscape and anticipating those policy shifts? Is it in identifying foundational technologies and those robust ecosystems with genuine long-term utility? Or perhaps is it in mastering the art of timely profit-taking and really disciplined risk management? Think about how you can adapt your strategy to not just survive, but hopefully truly thrive in this fascinating, ever-changing market.
Good questions to ponder.
Keep learning, keep questioning, and we'll be here to help you unpack more fascinating insights next time.